Today we're going to take a look at REITs, real estate investment trusts, in particular 5 REITs that I invest in equally, and these have been thoroughly researched and come out as good investments where they pay good reliable dividends. Real estate investment trusts, by the very name of them, they invest in real estate properties, commercial, domestic and the like, and they are obliged by law to pay out 90% of their profit after expenses in the form of dividends. So we're going to discuss the 5 REITs that I own. I hold these on the Trading 212 platform in the form of a pie, and that is 5 equally held stocks or 5 slices. And they are Avalon Bay, Digital Realty Trust, Essex Property, Public Storage and Mid-American Apartments. So that's the 5 REITs I hold, and we'll look at each one individually and discuss the reasons why I own them. And this every item should be applied to every REIT. The first one is Avalon Bay Communities Incorporated. It develops, acquires and operates multifamily communities in the US. Analysts, 4 say buy the stock, 11 say hold and 2 say sell. There's a predicted 20.1% price upside on the current value of the stock, and at the time I made my notes, the stock valuation was $168.06. The dividend payout is 4.04%, and 87.3% of the stock is held by institutions such as pension funds and hedge funds, where they employ lots of researchers, and they only invest once they've done a thorough investigation and there's a good likelihood of getting good return. So the research essentially has been done for us. You can find this out by looking at the percentage held by institutions, and that's a high number or high percentage, so that's a good pointer towards considering a REIT, this particular REIT. The price to earning ratio is 20.22. The sector average is about 135. The price to book ratio is 2.09. Anything below 3 indicates it's reasonably valued with respect with assets and liabilities. So we're going to look at 4 more of the REITs I own and apply the same commentary on how I valued it. And so we're looking at the next one is Digital Realty Trust Incorporated. This REIT owns, acquires, develops and operates a network of global data centers. It's essentially where servers are kept. You say anything in the cloud has to have servers somewhere and backup servers. So these are the buildings that they're housed in, not over publicized due for security reasons, but there's lots of them out there. Analysts say regarding this REIT, 5 say buy, 5 say hold, and 2 say sell. There's a predicted 24% price upside from the valuation or the value of $98.31. Dividend payout is 5.22%, and 95% of this REITs stock holding or stock is held by institutions. Price to earning ratio is 86.24. The sector average is 135. The price to book ratio is 1.63. As I said, anything below 3 indicates that the stock or the company is reasonably valued with respect to its assets and liabilities. The third REIT we're going to look at and apply the same commentary on valuation is Essex Property Trust Incorporated. It owns, operates and manages and acquires, develops and redevelops apartment communities, so private housing. Analysts say 6 say buy, 11 say hold, 4 say sell. There's a 21% or 21.4% price upside predicted from the current valuation at the time I wrote my notes of $209.14. Dividend payout is 4.53, and another large holding by institutions, 91.76% of the total stock is held by institutions. So what's good for them is good for us. Price to earning ratio is 33.3. The sector is 136.2. Price to book ratio is 2.3. As mentioned, anything below 3 indicates the company is reasonably valued regards to its assets and liabilities. The fourth REIT we're looking at is Public Storage. It acquires, develops, owns and operates self-storage facilities in the USA and Europe. We're all owning more stuff, we're running out of room, and we've got to store it somewhere, so we rent storage space. Analysts say 5 say buy this stock, 5 say hold, and none of them say sell. There's a predicted 22.19% price upside in the valuation of the stock, or the current value of the stock, from a current price of $302.14. Dividend payout is just over 4% at 4.07. 77.8% of the stock is held by institutions, which is a high percentage. Price to earnings ratio is 12.86. The sector is 136, so it's well within the sector average. Price to book ratio is 9.1. Anything above 3 could indicate that the company is overvalued with respect to assets and liabilities. That's the one question mark. But everything else looks good. And as I say, 77.8% of the stock is held by institutions. The last stock we can look at, number 5, is Mid-American Apartment Communities Incorporated. This REIT operates, acquires and develops apartment communities, more domestic housing. Everyone needs somewhere to live. Analysts, 7 say buy this stock, 7 say hold, 1 say sell. There's a 15.8% price upside from the price at the time of writing of $151.04. Dividend payout is just under 4% at 3.77%, and 91.20% of the stock is held by institutions. So there's lots of interest and faith in this REIT. So all the work's been done for us. If it's good enough for the institutions, it's good enough for us. Price to earning ratio is 27.5, sector is 136, so it's well within that. Price to book ratio is under 3 at 2.82. Anything below 3 indicates it's reasonably valued, or the stock is reasonably valued with respect to its assets and liabilities. So I've got 5 real estate investment trusts that we're have an investment in, and I say this is my account. In fact, it's Anne's account, my wife's, where she's set up a pie on Trading 212, where she makes investments, and that equally invested in the 5 REITs, or sliced up into 5 equal amounts. And at the moment, her holdings, since she's bought them, have gone down slightly, but there's nothing too much to worry about. We've only just started the holdings, and I don't think we've had any dividend payouts just yet, but that indicates the 5 REITs, and we'll be investing more in time. So that's my review of 5 real estate investment trusts that I'm or have invested in, or Anne has invested in, with a view of a good steady income and a possible increase in the value of the stocks. And this has given you exposure to the real estate market, or real estate or properties, all for less than £100. You wouldn't be able to buy a house to let out for that. So I hope you found this video of interest. Until next time, I bid you a really successful investing adventure.